Yeah! We go get some more coffee and we'll get going in about a minute or so. Yeah! Guten Morgen. All right, I think we're good to go. All right, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. Good morning. It's good to see you. What do you want to do today? Technical analysis, fundamental analysis, gold, oil, Bitcoin, dollar, yen, Swissy, FTSE, DAX, Nikkei. What you want? What you want? XRP, Litecoin, I don't know, whatever, man. Let me know what you want to do. I am a humble servant. So let me know how I can serve you today. Now I had a value ladder all teed up somewhere, I think, maybe. Yeah, this from yesterday. Different things that I think, different resources I believe your small trading institution should have. You need a broker that doesn't trade against you, one that actually executes your trades into the interbanking system. I think it's common sense, yet it is uncommon to have a service provider like Traders Way. They're an ECN using straight-through process technology. It is fairly unique in the industry. They're not the only one as an ECN, but most are not. So you can start your due diligence with my recommendation of checking out Traders Way and see if they can earn your loyalty and respect. Along the value ladder, now that you have a decent trading platform, you can get some training at Investor Bootcamp, and you get 100 hours of training videos, and then you can also upgrade your account to access some of the live groups. So, for example, today at 4 p.m., we are meeting in the swing trading room, and I am downloading all the important economic reports over the last 7 days, and we are going to read them, and I can explain the meaning behind the numbers. Usually takes us an hour or so, and you actually do the work that an institutional investor would do. Puts you well into the top 5% of the retail market. And we do that every Tuesday. So that's just what we would do today. If you join Investor Bootcamp, $88 a year, and then you upgrade to the live groups, and it's just $99 a month for that swing trading group. Yeah, cool. Quite valuable. Every day I do Quantbox, which is an automated system for doing all your fundamental analysis. Looks like I haven't uploaded for 2 weeks. Yeah, well, you know what? Paid members get it every day. All right. Man, look at all the wonderful stuff we're doing. They own oil futures. It was all about bear. So the sinking contest, babe, you are responding to the change. So I'm focused a lot here on COT, so that must have been a Monday. But we do amazing things, man. We do amazing things. That's $79 a month. And what that it does two things. Every single trade you make makes total economic sense, quantitatively. The second thing is, because of that, you have the confidence to let your winners run, or you know to not even try. Like this page here says, your winners are not going to run. That's what this page says. And now you know, because you're looking at the 2-year yield, the 10-year yield, you're looking at gold, you're looking at yen, you're looking at dollar, you're looking at the stock market, you're looking at the options market, you're looking at volatility, all on 3 time frames, and you know what's what. Or an amateur just does the same thing every single day and is surprised that it doesn't always work out the way they think. Because they're thinking, but they don't know anything. That's the problem. FX Bootcamp, the biggest thing here right now is there's a free training course. It's been up there for 15 years. Just so you know, it's pretty good. Each one's about 20 minutes. Okay. Cool. There you go. Okay. Here's stuff that I've done on Traders Way. This is 7 years ago. This is 8 years ago. Oh, look at that. I'm reviewing the Commitment of Traders report 8 years ago. Huh? Nothing's changed, right? Nothing's changed. But you still need to know. Another one, Tradars is a new service that I have that automates all your technical analysis, saves you tons of time. And for the very first time, on Wednesday, starting at 1:45 in the afternoon, just before the Federal Reserve FOMC interest rate decision, Tradars is doing its brand new, first time, never been done before, premiere, first live stream ever. So please visit. Wait, I can't get to the chat. Where's the chat? There we go. Please visit here and do two things. I guess I'm already subscribed, huh? You should be able to subscribe and turn your notification on. I think I'm already subscribed. And maybe click the thumbs up button. Okay, this is a brand new channel. All this stuff is super important. Whether you subscribe is important, whether you click the like, whether you turn on the notifications, right? YouTube's algorithm is watching. So please do what you can. Okay, please do what you can. So that's tomorrow. And yeah, this is what Tradars looks like. Very cool. So technical trade plans for Forex, crypto, individual stocks, commodities, indices, and volatility. Yeah. So like JOLTS in 49 minutes, we can analyze it. Yeah, we can analyze it. If actual is less than 8 million, that'd be killer, but probably not likely. We already covered this in Quantbox, by the way, so you should already know that. And if actual is greater, and that's more likely, where's the trade? Probably pound dollar. Maybe USD Swiss franc. But it looks like pound dollar, 2 hours up, 12 hours up, 48 hours up. So you get a scalp. There's no 4 hour. So you get a scalp, a day trade, actually a scalp and a swing, and a position trade. Interesting enough, no day trade. So you have to decide in and out before, within 2 hours, or hold it for the rest of the week. You know what I mean? And you're like, well, how does it get to that conclusion? Oh, you're smarty pants asking good questions, right? So if actual is greater than, is what my guess is, show me how you got to the conclusion. Okay, that kind of stuff. So it does all that. Very cool. All right, hang on. So that's that. We'll get going. Hang on, I wanted to... What was I doing? Oh, yeah. I need to do snippity snip snip. Snippity yay. Hang on, hang on. Do I have any emails open? No, I have to. Oh, maybe I do. I do. Cool. Glad I got that done. That was nice. All right. So where'd you go? What is this stuff? All right. Where did you go? All right. You're over there. Okay. Good. Sorry. All right. Cool. So let's get on with it. What's going on? Okay. Yen strength or on the hourly chart has stabilized. It was weak and now it's trying to come back around maybe. CAD's been terribly weak. It's, you can see these like stalling out. But if you use pivot points, you would understand likely why. Okay. McKenna, I like the language. I hear it in some awesome sort of, I don't know what it would be, English or English accent. A really cool bit of kit. But I couldn't do it properly. Anyways, a bit of kit. Sounds cool. Yeah. Don says, yeah, we're a monthly target on yen pairs. Oh, for sure. Yeah. Actually, several days ago, right? So we should know. And in the day trading group, we've already taken care of all this, right? This is such old news. But notice, look at plan A, right? Isn't that great? Look at that, dude. But, we did this on Monday. Like, what is it today? Tuesday? Yeah, we did this. Was it yesterday at 4 or was it Sunday at? I don't know. But anyways, yeah, we did this yesterday. Yeah, so it went up, hit the central, and is turning bearish. Oh, I know. If that fails, then the next one is up here. Yeah, it's all been done. Done. Done, I tell you, done. The issue is, if you're just rolling in now, and I make this point almost every day, but like if you're rolling in now and you don't know what to do, you have decided to fail. Okay? Okay? And so, yeah, we did this yesterday. And I even gave a story when we were down here about a trader who has, the number one goal, the most important thing for them as a very, 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 very successful trader over long periods of time, making buku bucks, as they say in Vietnam, the number one thing is that he does his homework the day before. And then in the morning when he arrives at work, sitting on his desk is his trade plan that he did the night before. Now, he's been thinking about it all night because he already did all the research. He already knows all the prices. He knows what he wants to buy and sell. So he walks in the office and he's got a clean desk and a sheet of paper, and it's his trade plans of what he's going to do today. And I gave that speech here after I did plan A. And the idea is that you recognize what the plan is, and the plan is sell it at 101.80. With the objective of taking it down further. Now, if it doesn't go, well, then what happens is over time your analysis changes, right? But, just imagine you're trying to figure out what to do now, what to do today. And I emphasize you've decided to lose money. Yeah. You must be able to plan ahead, prepare in advance, both technically and fundamentally. Okay? Another part of this is an 8% increase in bearishness for this pair, based on our quantitative analysis of institutional positioning for the yen in general. So it's not really Aussie yen. But we do know there was an 8% move toward yen. So, we have some pretty solid ideas here. In the worst case scenarios, it doesn't work out. It reverses from here. Well, so be it. Okay? Cool, right? Little soapbox lecture there. Little parental love. Huh? Trying to be Papa Wayne. Okay. Now what? What does the giant pink down arrow mean? Yeah. Okay. Yeah. It's just me reminding myself of most likely bearishness, or that maybe I want to remain bearish, or if it breaks up there, I take a walk. Well, Wayne, couldn't you buy it? Why would I buy it? Oh, well, because, no, dude. No. Okay? If you're chasing price all around, you're going to be very short term all the time. Okay? I don't want to be short term all the time. Trying to bring up Quantbox. There we go. Let's see. Well, David, you should also check the monthly. All right. What was I going to do now? Oh, yeah. We were going to look at Kiwi yen, for example. Okay. And the question is, should I buy it? No. No, I should not. Well, what if it goes up? Well, by all means, you do you. Okay? Not only is it bearish, it got more bearish today, overnight. Okay? Now, maybe things change because of seasonality. True. Maybe some of this economic data improves. True. Maybe it's something about the Bank of Japan today. As you very well should know, the Bank of Japan has an interest rate decision today. I already have an extremely accurate knowledge of what it will probably happen tonight. Now, I don't know necessarily about the response of the market to this data, but I'm not going to be, probably not going to be surprised by what happens. But nonetheless, I can do something like this. Mentally, think about this. This might even be your process. QB is equal to minus 10. And I could make a determination here. There's nothing that could happen technically to make me buy this. Oh, well, what if it rallies all the way back up? Well, you do you. But I'm a macroeconomic trend trader, and that smells like sweaty blue cheese to me. So, what about the pound yen? Well, they're all somewhat the same, right? And so with Quantbox, now inside of Tradars, did you notice that? It's inside of Tradars. Yeah, it's really cool. Yeah, so you're, but I want to trade pound yen. Well, I got everything, dude. Pound yen's only a -4. So you're selling one of the strongest currencies Pound is one of the strongest currencies on the planet. So you might have picked the wrong horse, but that's okay because I'm short pound yen. Here. Okay. And let me zip this thing. Okay, there we go. Got this. Yeah, if you're selling inside of here, that's perfectly fine. Yeah, perfectly fine. Yep. Okay. I sold, can you see this? The breakout pullback? You see what the cheeky monkey did? Let me do it a little bit more like this. Okay, inside of that, you see? Breakdown, pullback, sell, 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 roll reversal, take it down. Kick it off to 21. Okay, so could you sell in here? Well, that's why we use these two moving averages, yeah. Now we're missing some data here. We only have very, 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 very long-term pivot points. You should be able to add, and you'll probably notice that this is an out, and this is probably a get back in. Now, Big Boss says, what about dollar yen? But we are, so like dollar is a funding currency. Yen is a funding currency. Swiss franc is a funding currency. So, yeah, you could be trading these and do dollar yen because right now we have cross currents. So if the market is trending up or if the market is trending down, I'm trading all of these the same. So let's just say, Big Boss, 60-70% of the time we're trending up or we're trending down, meaning risk on or risk off. And I would never trade these two against each other. So in the middle, when it's trending sideways, you could, but then you don't really know which one to trade. You're trading short-term relative strength. So really, I don't trade USD yen a lot, but 90% of everything I do is buying all of these or selling all of these at the same time. No, if it's risk off, I'm buying dollar, I'm buying yen, I'm buying Swiss franc. So I would never trade dollar yen because they're both strong. You see? Now, you might make money because one might be a little stronger or one might be a little weaker. But it still means you're missing the better trade. So like when you go to here on the short run, okay, can you see since the 18th? Okay, let's do from the 18th. Okay, from the 18th, yen has been strong. From the 18th, dollar's been strong. So if you've been trading USD yen, you might have made money, but it's a dumb trade. You would have found something better, like sell the Kiwi and buy the yen, sell the Kiwi, buy the dollar. You see? And dollar yen would have been dumb. But you still might have made money. But it would have been a pittance. Okay? You gave up $1 to make a dime. Okay, you bet on the wrong horse. That's all. Oh, there could be a myriad of reasons. Does it matter? No. But the change in direction, yeah. But really, does it matter? No. What matters is you're making decent decisions. Okay. Now this is much longer term data. The other one was very short term, just recently. Okay. But you go back from here to here, dollar's definitely up. Yen is definitely up. So trading dollar yen going back many weeks now to the beginning of July, trading dollar yen was just relative to your other opportunities a dumb trade. Doesn't make you dumb. I don't even know if he made the trade, but I'm like with some analytics, you can make much better investing and trading decisions. Yeah. Yeah. Most people would trade euro dollar or dollar yen because it's their favorite. I love all my children. I don't have any favorites. So anyway, so you need to analyze all this. And you're like, dude, you gave that up to trade dollar yen? You gave that up to trade dollar yen? You gave that up to trade dollar yen? It just don't make no sense, right? So that's all. That's all. So trading yen versus dollar during this period should produce basically sideways results. Yeah. And you miss the big moves. Yeah. Now, how do you prevent that? You're like, Wayne, I'm not really good at that type of analytics yet. I haven't got there. Well, when you log into Quantbox, soon to be Tradars, it says sell all the yens. Okay? Even USD yen. But just sell all the yens. Yeah. And look at sell a commodity currency, 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 sell a commodity currency. Hey, do you think you should be selling commodity currencies? Huh? Yeah. And then you go to like scorecard summary under scorecards. This is how your thoughts should be organized, right? And you see like commodity currency, like a commodity currency, 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 right? And then on the flip side of that, it just continues. Yeah. So USD yen is showing that. But the other part of this is, it might make economic sense, but it doesn't necessarily make technical sense. So you want to look at things like seasonality, which predicts change in direction. And then trend gives you the strength of the direction that exists. So like you could see pound CAD has been a great trade to the upside, but it is slowing down. It's only got a technical trend of 1, and it usually by now is actually falling. So did it go from a 2 to a 1, and is it going to go from a 1 to a 0? And if so, the score is going to fall, and So sometimes you might want to look at neutral and see, okay, we have a 2 on seasonality and a -1 on technical trend. Well, maybe you buy a dip because of that, huh? So but the thing is, every time you make a trade, big boss, every trade you make will be, logical based on quantitative analysis of macroeconomic data. And that's where I want to get you at. Your favorites are based on logic, not emotion, right? It's super cool, right? I wanted to show you one of these. Which one was it? Forex pairs? No. What was I working on? This one, I think. Look what's happened since this morning. Yeah, it's not quite right, and this is not good. But anyways, I tried. I'm trying, Bubba. They're not leaking and they're not lagging versus technicals and fundamentals. Let me show you. So let's look at silver. Okay, I just grabbed one randomly. All right, this is the shape of the silver market. The green line is the 20-year average. The red line is the 5-year average. The gray line is what's happened this year. All right. So I already know what usually happens between now and the end of the year. Is that lagging or is that leading? See, between June and August, silver usually rallies. From August to September, silver usually falls. Okay, from September to October, it bottoms out. October, November, up. November to December, up. All right. So, WWWD, what would Wayne do? Somewhere around September, October, I buy silver and hold it to the end of the year. So when somebody says, oh, do you trade silver? And I'm like, yeah, I buy it in third week of September. Which I've been teaching for a decade, huh? Front running? Well, sort of. Imagine now, let's say somewhere in September. Okay, somewhere in September, the 15th, the 21st, the 8th, I don't really care. Let's say silver drops, hits a key pivot point, double bottoms, makes a higher high, makes a higher low, WWWD. What would Wayne do? Knowing that on the 20-year average and the 5-year average, this frickin' thing always rallies. Well, of course, it doesn't always rally, but on average, it rallies. So what should I do? Should I buy it or sell it? Buy it. Should I hold it for 1 day, 5 days, 30 days, 60 days, or 90 days? What would you recommend if you were planning the future? Okay. What happens if it's day 72 and we see something like this on a key level? Okay. If this is a buy, could this be a sell if this happened December 12th? You get a double top, lower low, lower high. I don't counter trend trade, big boss. My name is Wayne McDonald. I'm a global macro trend trader. Yeah, I take my money I jump in my private jet and I fly to the Caribbean for Christmas. Okay? And all you scalpers are going to stay in the factory putting labels on cans and get paid by the hour, where I'm already, boom, I'm getting a suntan. On what time frame? Yeah, good question, Uche. Usually not a small one. If you're going to hold it for 90 days, you're probably not on a 15-minute chart, right? It's not necessarily the Fed decision, okay? It's the market reaction. Okay? So if the market giveth and the market taketh away. So if the market decides to kind of dump 4 days before the Fed decision, so be it. And it just takes me out of everything and I'm gone. And what am I going to do? Rebuild positions with, 10 days left in the trading season before everybody starts bailing out? No, it'll mean like that month I'll make 3% instead of 4%, but I didn't face any risk either, right? Remember, I'm most concerned with sustainability. I'm not trying to make the most money possible. I need to make, I need a sustainable business. So if risk pops, I have to take my money and protect it. You see? So if some of these trades I've been in for 90 days, dude, I'm fine. Right? I'm fine. I'm good. And so if I have to bail out of the market 5 days early to 10 days early, so what? No one will care. By the end of the year, no one will care. Nobody even will know. Okay. Okay. Yeah. It's okay. If you perceive the risk, you must do something. That's the message I'm trying to get across. But do you see the power of this knowledge that we have? So is that lagging? No, that's not lagging. Okay. And of course, I have this for everything. Like, look at this, dude. It's so crazy. I have this for everything. You're not going to have a surprise if you have access to the research. So the biggest risk here is something a little bit different happens. Oh, it's not fake. Let me show you how obvious some of this stuff is. Let's go to that. Let's go back to the yens. Okay. In early January, it might have been late December, but I think I did it very early in January, like the first week of January. I did a 2.5 hour presentation. I charged $4.44. Okay. One of the things we talked about is this price being the projected high for pound yen. I did this in early January. We also thought that it would happen in the first week of July. I say Canada Day or July 4th. But I do say things like definitely before Bastille Day, right? Between Canada Day and Bastille Day, we typically top out. And my projection would be that's the most aggressive projection I can make logically. There is one more price it could go to, but it's not something that's predictable. Okay, this is the conservative target. This is the aggressive target. Now, we do have central bank creating yen weakness at that point, so it makes sense, right? But let me ask you, is this fake? Notice I marked this. This at the time was the daily 21. It came up and then dropped. Okay? Came up, kicked off the 21, dropped. Came up, I sold it. I should be here too, because it's a role reversal, you see? But the thing is that fake? No, it's predictable 6 months in advance. Nothing fake about that. Huh. Well, hell's bells. Yeah, well, hell's bells, right? So what about here, if we go Great British Pound? Okay. Between July and September, the 20-year average and the 5-year average is down. Okay? And the move can start as early as sort of May, June period. But definitely, okay? Down, 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 down. And typically bottoms out somewhere in September. Now, I teach you somewhere between the third week of August to the third week of September. I also told you in January, see, I'm your coach. Remember, when you hire me through Quantbox or Tradars, you're buying access to a research software to help you make logical and intelligent investing decisions based on quantitative analysis and automating your technical analysis, but you're also hiring a Harvard degree economist to work for your small trading team. And so what I told you in January is this is going to shift over. And it'll probably be the third week of August. Now, it doesn't say this in the chart. No, it does not. But I'll tell you what I think. Okay? What I said is I think this will start late and then hang late. Okay? And then rally up. Okay? And by the way, let's go back to normality and the question of like, well, what about the Fed meeting? Great. Okay? Check this out. There's a Fed meeting in December. And what this window says between November and December is that somewhere in that period it falls. But we don't know if it's on the first day, the 15th, or the 31st. Right? We don't know what day it's going to fall. So just before or just after the Fed meeting is probable. Well, how do you get it? You need United States dollars. I built it for you, Uche. We've been using it now, and I've been upgrading it steadily. Okay, here's the standard deviation, and here's the week-by-week analysis. Okay, so by week 48 out of the 52 weeks, you should probably take some profits soon. Get ready. So for me, it's usually 12-12, somewhere around 12-12, because that's easy to remember. And I've been teaching that for 2 decades. But somewhere in here, so we'll just pick, somewhere, right? Because it's probably not the 31st most years, because Well, we have Christmas around the 25th, which means most people go on holidays around the 12th. So there's really somewhere between the first day, the 20th. So somewhere between the first day and the 20th day, people are going to bail. And then in those 20 days, you have a Fed meeting. So somewhere like, I don't know, I picked 12/12, somewhere almost in the middle, where then I look as a window. So in that window, if my yen pairs suddenly make lower low, lower high on whatever time frame I need, I'm already afraid. So I'm ready to go. You know what I mean? Like I'm hot to go, HOTTOGO, for taking profit. And all of a sudden, right in that window, I see a lot less bullishness. Holy schnicker schnock, give me my money. F you, have a wonderful Christmas. I'll see you next year, Jose. And I'm out of there. I got the jet gassed up. Okay? Yeah, and I got this, Canadian white boy body, so it looks like a hot water heater. And pretty soon, by the time I hit next year's laying on the Caribbean for a couple of weeks, I look like one of those roller dogs at the gas station. Nicely tanned and blistered here and there. Yeah. That's a beautiful vision. Okay? But here's the thing. I already know what I believe my expectations are and what my behavior will be. What I don't know is exactly how it's going to go down. But I imagine it's very similar to military training. Okay? You know how to work as a team. You know how to fire your weapon. You know offensive strategies. You know defensive strategies. And then you get deployed on a mission, so you get briefed. All right, listen up. Okay? And you're like, here's the target, and here's this, and there's that, and here's the exfil, and okay, and you're like, how many guys are in the, okay, we got about 18, and okay, good, where's the package? Okay, great. And you know all the variables, or somewhat know where all the variables are, and then you go, and they drop you off by helicopters. And they drop you off in the middle of the night, and now you got to adapt. You got strategy, you got tactics, but in the real world, you don't know how this is going to go down. We call that the fog of war. And now your ability to adjust and adapt. Right? So I know I have my strategy, I have my tactics, I know my window. That's my area of opportunity. And when I get there, now I adapt. Am I going to get out the first, the second, the third, the fourth, the fifth? Some years I have held it to the very end of the year. And that poses a new problem. But the thing is, you definitely see profit taking here. And then people buy it back. Now, what is going on? Well, the other issue is if you happen to hold to the 31st, so now you're at 1231, what do you do? And you're like, well, what's the big deal? Well, if you took profit at or near the 31st, okay, taxes are due, okay, in about 100 days. Depends if you're incorporated or not incorporated. If you're incorporated, you got to pay before April. If not, if you're paying as a regular person, which doesn't make sense if you're making or even if you're losing money, that doesn't make any sense. But, regular people pay April 15th. Okay? Now, what if you take profit January? So usually January 1st is closed, and then very often it comes on a weekend. So let's say January 3rd. Okay, you take profit. Okay, you pay taxes in 465 days. Well, actually, you got them around 462 days. So very often you have that profit taking right in here. And then, okay, and then what? By 1/8, so after non-farm payrolls, okay, this turns to that. And people, okay, get back in. Most years, not all years. You can see quite a bit recently. Okay, the 5-year average is definitely a positive month. Am I going too deep? Is this too much? Okay. Okay. Yeah. So this analysis says, okay, around week 40, you should probably buy. And then even here, this is Thanksgiving week. You should be ready to take profit. Okay? So somewhere around November 25th, okay, to 12/12, I have quantitatively provided you the 20-year average, although I believe this is based on the 10-year. Okay, I think that one. So based on 10 years of quantitative analytical analysis of the pound yen specifically, I can tell you it makes total sense that between November 25th and December 12th, you will probably have an opportunity to take profit and have the rest of the year off. And everybody else on YouTube doesn't know jack. Okay? People bragging, I've been trading Forex for over 5 years. Okay? Yeah, whatever, bro. Yep. Cool beans. Cool beans. Two minutes and 48 seconds until we get JOLTS. You want to see something cool? I got to go backwards. Huh? Most people don't know anything. Yeah, I just showed you I'm up 500 pips on the pound yen. All right. Fundamentals, employment, JOLTS. See? Cool. There's the numbers. Do you think it's going to be higher or lower? Yeah. You're like, give me the average over 36 months, Wayne. Oh, well, that's hard. No, it's not. I mean, dude, this is ridiculous. Okay? Ridiculous what we have at our fingertips. Okay? Oops. You will never trade like an amateur again. Or you're just making really poor decisions. And no, so be it. This is insanity, what we have. So I think there's a pretty high chance, or let's say there's a pretty decent, higher probability of not below 8. So I got it all set up and I'm teed up and I'm ready for pound dollar. And it will tell you if I'm right and it's greater than 8, I can look at historical averages, down and up, down and up, down and up, up. Okay? But that's just on the short run. Because remember, you can change this to longer term. So that's just the scalp, but you can do like the day trade or the, and then I'm like, prove it. And slow up, up and down. Okay, look at that, down then up. So not great response, but definitely up, right? So if actual is greater than extent, will be up. But let's do 2. Did anyone get the number yet? I'm just assuming I'm right. Anybody? Post the number. I'd have to switch over to calendar. This data provider for the news results is expensive, so I can't get it real time. It's just prohibitive. But what I would do is I would look at the pig dog. Yeah, okay. I mean, dude, we have the data, so like being right is not a shocker at all. So we're intelligent. I'm telling you, you're going to be smart money. So now you can have things like, based on this, okay? So we don't know what the future holds. But what we do know is in the past, and it still didn't do it. I see. Let's get rid of consensus. I just can't paste that much text. Okay. Now we know it's not up immediately, but over time it has produced up. So this acts like support, or this acts like a fib level, right? And the thing is, that's all. We also know this is resistance. It's just basic price action principles. This is overly complicated. I got a lot of things going on. So why don't I try to adjust this? Oh, you know what I want to do? If I'm going to adjust this, let me grab this. Can I copy that? Hang on. I don't think it's going to copy. Will it copy? No. Anyways, I do want to clean this up. So hang on. Template. Even Lucas ribbons would be fine on a smaller time frame. And I think we can do this. Okay. Is it bullish yet? No. And remember, this has to do with the past as well. What's the difference between now and the past? Okay, let's thread this needle here. GDP 2.8. Okay, JOLTS. Okay, 8.06, 8.14, 8.18 is the 3-month trend. Okay, both these things suggest Fed can't cut. So you still have to understand the context of everything, right? So it's usually a good thing to have good GDP or a high GDP. It's usually a good thing that the economy is adding jobs, or at least job openings. I mean, they may not be able to fill them. Okay. But again, at Investor Bootcamp, this morning at Quantbox, I already covered all this. Everybody already knows. If you have an expansionary GDP, it seems weird for companies to be like, oh my God, we can't hire people because we're doing bad. What do you mean you're doing bad? We're expanding at 2.8, right? So it's not a shocker, but if with dollar strength here, do you know what that means? People are now saying the Fed will not cut in September. Yeah. Now, you're like, well, what about sonars? Well, this is precise. Okay, it's what has happened in the recent past. It doesn't go back 30, 40, 50 years because then it becomes convoluted data. It's more recent. So more recently, it's been up because usually this is good news, and good news usually means risk on. But when was the last time the United States had GDP at 2.8% and the Fed cuts? You know, the last time that happened was probably never. Okay? Usually the Fed would raise. So that's kind of the thing. Now, let's go back to what has happened. Okay? Plan A was here. I've already outlined it. Plan B is there. Plan A is here. So are you a scalper? Okay. Some of you say you're scalpers, but then you decide to buy it here or here after 1 or 2 or 3 giant green candles. If you do that, you're not a scalper. You think you're a scalper, but you're slow as molasses on a cold Georgia morning. That's not how you scalp. When you hit support, if you're a bull, you buy it. So let's say you bought it here because we knew this is a support zone. So you buy it off support, and guess what? Your stop is like right here. Now, if you buy it here, where does your stop go? Right here. And what happens up here? Down. So you can't wait. If you're a scalper, you go long on support, and if you're wrong, you lose a little bit. That's what a scalp is all about. And then typically, if you're a scalper, you take profit here. And that's the thing where if you think you're a scalper and you wait for the move and then you buy it here, you're not a scalper. Okay? You see? So make sure. You better check yourself before you wreck yourself. Cool. Now what Tradars is showing us is over time. Do you remember? Oops, delete. Do you remember when I showed you? There were tons of times where it did this and then 2 hours later had a higher high, or 12 hours later had a higher high. Do you remember seeing that? So if it doesn't breach and make a lower low, then there is some chance. Now, the other thing is we saw that it was a shallow move, so it moved more like this. Okay, like you're not going to make a lot of money, and if you make money, you're not going to make it fast. That's what we saw looking back a couple of years. Yeah. Hey, by the way, did you click thumbs up? It doesn't seem like you clicked the thumbs up button. Be nice. 11 thumbs ups. That's not very good at all. 11? Well, if it's only 11, maybe I should end it now and not waste your time. Maybe I'll go take my laptop outside, get a nice... Oh, I bought some... Oh, my God. I bought some very, very, very premium cigars. Holy smokes. Like, I haven't been excited in a while. Anyways, yeah. So if I'm boring you, I'll go do all this by myself. Yeah. I know. It's kind of bitchy, isn't it? Yeah, well, okay. Look at me. I'm a sexy bitch. So anyways, thank you. We got that up to 38. Oh, is it 46 now? Oh, see, you're beautiful. Thank you. 42. 4 people took them away. Made up. Yeah. All right, so now it's the moment of truth. Is it going to work? Now, just pay attention. Where's the support? We have support there. And we have support there. This is important to both bulls and bears. If you're not marking this, you're not paying attention. Okay? Better together. Yeah, I think we're, once in December, once I launch the integrated Tradars, one of the things I'd like to do is movie night early in that new community. We have the ability for moderators to actually start live streams. You don't have to be the Wayne. We'll have moderators, what I actually call community leaders. Yeah. Yeah. Community leaders. And they can start live streams themselves. So we could have community get-togethers and focus groups and support groups. And someone might say, hey, how do I do X, Y, and Z? And you're like, wow, let's just fire up a live stream, a webinar, and let's talk about it for everybody. And so anyways, one of the things that I would like to do is movie night. I always thought Wall Street would be one, but how about Floored? Has anyone seen Floored? About floor traders, the last floor traders? I was invited to the premiere in Las Vegas, so I had, VIP tickets to the premiere of the movie. And it was at like 7 o'clock. And on that day, I had a 4 o'clock presentation in the grand ballroom of the MGM. It's about the size of a football field. So I'm doing my presentation. I'm speaking to this ginormous crowd. And then when it was over, about 5, I guess, I was leaving. And about 30 people wanted to ask me questions. They came right up to the stage, and I'm walking out, and they're all following me. And so we get to the end of the football field, and there's the last row of chairs, and they're still just asking great questions, and I'm answering. So I'm like, we grab some of the last chairs, and we put it in a big circle. Now it's about 5:30. I missed the premiere with my VIP tickets, because we sat there, the group of 30 of us, and I just answered questions for hours. Just hanging out with fellow traders for hours. But I missed the presentation. I missed the movie premiere. I have seen it, though. I watched it recently, and it's very depressing. But it also shows you... you have enough inside this community, inside the training, inside the resources that is being provided. You have enough to compete with professionals. You really do, because you'll get a glimpse at at professional floor traders or former professional floor traders. I think Linda Raschke is in it, and she's one of the market wizards. I think in the second or third book, but and you get to see them as people, and you're like, oh, well, if that's my competition on the institutional side, I think I can compete. And that's why I'd like to watch that. So we should watch it as a community. We get together, we'll schedule it. Everyone will bring what you want. Coke and a bottle of Coke and some popcorn, or scotch and a cigar. But we can get together as a community. Yeah. But there are many rogue traders, Wall Street. There's a lot, I think, that we could watch. Even maybe Boiler Room. Okay. Okay. And yeah, book club for sure. Be very similar, right? Margin Call. That one's, yeah. And some of these movies, you might want voiceover. So maybe I pause it for a second and say, all right, let's talk about what's going on here. What are they talking about? What do they mean? What's the innuendo? What's not being said, but everybody in the room knows? That kind of stuff. And explain it and then pop it back up. Pig is melting. Well, we can take a look at that very quickly. Okay. Maybe. There's probably a combination of pound dollar, pound Swissy, pound yen that would be working. So you can thread this together and so you're like, pound is melting, but okay, what? No, not against yen. Okay, pound what? Pound dollar. And are you talking about this? I'm on a 5-minute chart. And is pound melting or is dollar strong? Well, like I just explained to you, if people are now reducing their bets that the Fed's going to cut because of the logic I explained, not just JOLTS, but like GDP, for example, then dollar will get strong. But we've analyzed this. I mean, you could trade that thought perfectly fine, but you have to understand what you're doing. What are we doing here? We're only trading vol on JOLTS based on a higher than expected, which we actually expected. We actually expected the unexpected and got that. We had better data than even the experts. You're welcome. So, and based on analytical analysis of the pre and post volatility in the scenario of greater than expected JOLTS data, we looked back years and saw the probable outcome. And even in periods of red candles on 15-minute chart, by the way, it doesn't use 5-minute charts. Even on red candles like this, 80% of the time, 2 hours from the news, so 2 hours from now, we will be higher. There's an 80% chance still, not based on the future, but what was based on the past, and the past performance does not predict future results, but we just happen to know that 80% of the time, in 2 hours, it'll be higher. But we also know in 4 hours it'll be higher, and we also know in 12 hours it'll be higher. What we don't know is how much higher, and in that period does it go up and then all the way back down? Well, those are all good questions. We don't know that. But we do have access to the past. And so, again, looking here, this is 15-minute charts. It dropped. Okay, this is July, guys. July. Okay, down and then up. Okay, so anyways. So there's still a pretty reasonable chance down and then up. Now, if it doesn't happen, then you don't get a trade. What are you so upset about? Okay? If you're trading the fundamentals, that says there's a higher probability of no Fed cut in September. Well, then you should be trading fundamentally. But if you're trading the vol, there's a chance of basically a scalp or day trade up. But have you got the opportunity? No. What we did do is on the smaller time frame, okay, we identified 2 levels of support. One would be here, and one would be here. Well, the first one didn't act as support. The second one might. So you just have to decide what is your strategy. If you're going to trade vol, you can't trade fundamentally. The fundamental change. Okay? One or the other. One is, shorter term, and one is higher term. There's another bounce here, but what we've seen looking at the past is it usually finds its support in the first 15 minutes. We already know that by looking back through 2 years of candlestick data in scenarios in which JOLTS was higher than expected. Having seen those situations, we know the outcome, and we usually know support is found in the first 15 minutes. So, a success on this would be up, back into the moving averages, and you take your profit. So you're in, like for example, now we don't necessarily know that, but that would be a very logical short-term type trade. And if we get, where's my little thingamabob? Oh, there it is. That gets you from here to, let's say, about there, about 30 pips, somewhere between 22. So we'll say somewhere between 20 and 30 pips likely. Or you just trade it randomly and hope it works out. Now, if I was a long-term trend trader, I would just let it go up 30 pips and sell it high and then go on, right? Okay. Now, David says he doesn't think pound's going to go anywhere. Well, it's just vol, right? The trend on this in the moment is this. It isn't going anywhere. But it's more likely, okay, the closer you get to here, for example, the more likely it returns to here. So it's just a range-bound type trade. So you're right. Okay. Yeah. Cool. And I think a lot of this dollar strength you see here, like this, is not really a change in the economic bets, if you will. Now, there's some of that in there. There's no doubt. But I think a lot of the move is people exiting because of the upcoming volatility. They don't want to be exposed to the Fed meeting just in case the Fed doesn't do what everybody thinks it's going to do. So if the meeting at, let's say, 2:30 or 3 o'clock tomorrow, the Fed says, yeah, nobody's really ready to cut, especially with the 2.8 GDP. Oh my God! Nobody's really positioned well for that. And that would bring the pound dollar down significantly. So people are like, well, get me out now. And if the Fed does what we think they're going to do and hint that there's going to be a cut, like basically tee it up for everybody, then pound dollar is going to go up and you can always buy a dip. What's the big deal? Because it's going to go up for 18 months. Barring normal seasonality of ebb and flow. But if you're a long-term institutional trader and you're looking at like weekly charts, it's up. And so here's what's likely to happen. You remember? You want to see what institutional investors are thinking? Let me show you how to trade like an institutional investor. You ready? Okay. They're going to buy this dip. Okay, and it's going to go up and make a higher high. Somewhere along there, it'll make another dip. Probably here. Ooh, I'm predicting the future. Well, that's all we do, y'all. Okay, you have to know absolutely everything and accurately predict the future every single day. And if you can't do that, you're not going to be profitable on the long run. So you have to understand how all this works. There. I just predicted the next 18 months. It's so easy when everybody's trying to please me, baby. That's it. But retail traders want to make it more complicated. They want to be long everything up. They want to be long or short everything falling. And they're late to every single one of those opportunities. They end up getting some pennies in the middle, just enough to keep them excited to keep trading, even though in the long run they're not making any money. And if you find you'd be better off flipping burgers at McDonald's because they give you a free iPhone and you make $20 an hour, and that pays more than being a Forex trader, either make a radical change or work at McDonald's. Okay? I want you to know how to be an institutional trader and have it positively impact your retail Forex trading. Okay? And dude, even if we have another red week, does it mean the uptrend is over? No, it means we've just retraced back into support. Right? I would be, if I were me, ready, willing, and able for some up. And imagine you could hold it for 18 months. No way. Well, how can you let your winners run if you can't predict the future? You don't know the difference between a 30 pip trade and a 300 pip trade. If you can't make that determination in the quality of your setup, you don't even have a setup. Right? There's a difference between buy and hold and buy and hope. So I hope all your trading and investing decisions are backed by quantitative analysis, historic data, facts, and even something as simple as identifying the underlying intrinsic trend. Okay? So I can go back to get out of this. Let me just show you how easy your trading career is going to be once you integrate our new Tradars. So I'm going to go to risk analysis. Okay. And watch this. You ready? What's the trend? We don't have one. Done. I just analyzed 24 variables, independent market participants. I just surveyed the entire financial community. And in 1 second, I can tell you, there's no trend right now. More money's coming out of the market than going into the market. So should you be able to adjust and adapt? Yes. And those that can't will be left behind. The thing is, you won't be left behind if you stand tall, get strong, and stick close. Peace on earth. May the pips be with you. May your profits be above average.